Hello and welcome to the Finwell Daily Brief for April the 3rd, 2025.
Yes. The markets never sleep, do they?
No, they do not, which is why we are here for briefing number 13.
Briefing number 13 already? My, how time flies.
Indeed it does.
And today, well, we've got quite a bit to unpack as always. The closing bell rang at 3:30 p.m. IST.
Right, and we've got insights from across the, the whole financial news landscape. Before we dive into the numbers, though,
Yes.
did you know that almost half, like 49%,
Oh,
of Indian household savings are tucked away in real estate?
really? That's actually not surprising to me at all when you think about, well, the cultural significance of property ownership here.
It's a really interesting backdrop, isn't it?
For sure, especially when we look at how the markets are, how they're behaving.
Exactly. So, okay, market overview. It was a bit of a mixed bag today. Right. The Nifty 50 closed just a touch lower, down 0.35% at 23,250.10 N.
Right.
The total market index, that also saw a slight dip, 0.06% down. But then things get a bit more upbeat when we look at the mid and small cap indices.
I see.
Yeah. The Nifty Mid Cap 150, that closed up 0.20% at 19,238.4. And the Nifty Small Cap 250, well, that was a bit of a star performer today. Closing up a good 0.70% at 15,285.45.
So a bit of a divergence between those large cap indices and the mid and small caps.
Exactly. Now, one of the big stories making waves today is the news out of the U.S. about tariffs on Indian imports.
Big news indeed.
A 26% tariff.
26%? That's quite a number.
It is. But I think it's really important to put that number in context.
Context, yes, that's key.
Because this rate, 26%, it's actually lower than the tariffs the U.S. has imposed on other Asian economies, like China, Vietnam, for instance.
Okay, so India's not being singled out, per se?
Not exactly, no. The report suggests that the U.S. is, trying to address trade imbalances.
Right, the age-old trade imbalance issue.
Exactly. Now, let's zoom in on how different sectors are reacting to this news, because it's quite interesting.
Oh, absolutely. Markets are all about, about reactions and adjustments.
Exactly. Now, one sector that seems to be breathing a sigh of relief today is pharmaceuticals.
Pharmaceuticals, really?
Yeah. Indian pharma exports, you see, they've been given a special exemption.
An exemption, huh? Well, that's good news for them.
Yeah, it is. And, well, we can see the good news reflected in their stock performance today. Companies like Dr. Reddy's and Cipla.
The big players?
Yeah, they've seen their stock prices jump up quite nicely.
I see. So the markets are, they're clearly responding to that exemption.
Oh, absolutely. I mean, it really shows, doesn't it, how crucial India is to the global pharmaceutical supply chain.
Makes sense. A lot of essential medicines come from India.
Yeah, exactly.
Okay.
And if you're an investor keeping an eye on pharma, well,
this could be a good sign.
It certainly could be. Now, shifting gears a little bit, there's one industry that might be feeling a bit more anxious today.
Oh, and that is?
Gems and jewelry.
Ah, I see. Tariffs and luxury goods, not usually a good mix.
No, not at all.
Yeah.
And the thing is, the gems and jewelry industry here, over 30% of their exports go to the U.S.
Wow, that's a huge chunk of their business.
It is. And that 26% tariff, well, that could really make their products a lot more expensive.
Yeah, it's going to squeeze their margins.
Exactly. So they're going to have to be very strategic.
Right. They'll need to adapt, maybe look for new markets, maybe focus on higher-end products.
Yeah, they've definitely got some thinking to do. Now, another sector that caught my eye today was IT. The Nifty IT index. It tumbled pretty sharply today. Its biggest drop in 2 years.
2 years. That's quite a fall. It's not all down to the tariffs, though, is it?
No, you're right. It's a combination of things. The tariffs are definitely a factor, but there are also concerns about a possible recession in the U.S.
Ah, yes, the R word.
And of course, Indian IT companies, they do a lot of business with U.S. clients.
So a recession there could really hurt their bottom line.
Exactly. So, yeah, bit of a double whammy for the IT sector. Now let's move on to bonds and the rupee. How do they fare today?
Let's see. Well, the 10-year Indian government bond yield, that's up to 6.605%, a rise of about 1.87%.
So bond yields are climbing.
They are, and, that's pretty typical when there's uncertainty in the market.
Right. Investors get a bit jittery.
Exactly. They want a higher return to compensate for the risk.
Makes sense. Now, the rupee, how's it holding up against the dollar?
Well, it's actually appreciated slightly today. It's trading at 85.5450 to the dollar.
Huh. So a little bit of strength there.
Yeah. And I think that's probably down to a couple of factors.
Oh.
Well, first of all, the tariff rate, while not insignificant, it wasn't as high as some had feared.
Right.
And secondly, the dollar itself has been weakening a bit recently.
So the rupee's benefiting from both of those factors.
Exactly. Now, what are the analysts saying about all this? Are they panicking?
No, not at all. Actually, there seems to be a sense of, I would say, cautious optimism.
Cautious optimism. So not throwing in the towel just yet.
No. The feeling is that Indian markets might actually be more resilient than some other Asian markets.
Interesting. Why is that?
Well, for one thing, as we mentioned, the tariffs on India are lower than on some other countries.
Right.
And importantly, India's domestic economy is pretty strong.
So we've got a good foundation to weather the storm.
Exactly.
Okay.
So given all of this, what are some of the key investment themes that are emerging?
Well, one that jumps out is pharmaceuticals. I mean, with that tariff exemption,
They're in a sweet spot.
they are, and it really highlights the fact that India's pharma industry, well, it's a global player.
It is indeed. Now, on the flip side, we've got the IT sector.
Right, and I think caution is definitely warranted.
Yes. Their reliance on the U.S. market, the possibility of recession, those tariffs.
It's a tricky situation.
It is.
Yeah.
So investors in that space need to be very careful. Now, what about gems and jewelry? They're facing those tariffs head on.
Yeah, they are. I think investors who are exposed to that sector really need to reassess their strategies.
Right. Figure out how those tariffs are going to affect profitability and, export volumes.
Exactly. And another interesting theme that's emerging is the appeal of domestic-focused industries.
Domestic focus. So companies that primarily serve the Indian market.
Yes, exactly. They're likely to be more insulated from all these international trade tensions.
It's like having a safe haven in stormy seas.
It is. It really shows the power of India's internal market.
It does. So let's wrap things up with a quick recap for our listeners. It was a mixed day on the markets.
Ups and downs, as always.
Exactly. The U.S. tariffs are a major development. Pharma is benefiting from that exemption.
While gems and jewelry they're facing some challenges.
They are. And the IT sector, it's got a few clouds on the horizon. Bond yields are up, but the rupee is holding steady.
It's a dynamic landscape.
It always is. And that's why it's so important to stay informed and have a sound investment strategy.
Diversification. That's key.
Absolutely. Don't put all your eggs in one basket, as they say.
Wise words.
Indeed. Now, if you want to keep up with all the latest market developments, be sure to subscribe to the Finwell Daily Brief.
And for more personalized advice, you can always reach out to SOS Finwell on LinkedIn.
We're always happy to help. And before we sign off today, I want to leave you with a quote from the great Benjamin Graham.
Ah, the father of value investing.
He said, and I quote, "The goal of investing is not to get rich quickly, but to get rich surely."
Words to live by.
They certainly are.
Yeah.
Until next time, happy investing.
Goodbye.